This is another episode of me trading smart, managing risk while learning how to trade effectively. And today, I did all three of those things, although both the trades that I took did not play out in my favor. I got stopped out. I still had my analysis correct. My draw on liquidity was correct. The market traded in the direction where I anticipated to trade, but I just slightly mistimed the market. So, stopped out on both the trades that I took in each session. Now, recently, I've been fostering self-control and discipline to just take one pull of the trigger in each session that I trade and be content with whatever outcome that I get, because I want to become a professional money manager, right? That is the goal. I'm not going to go in there and chase the move after it plays out when I stopped out because I feel FOMO, you know? I'm working on controlling those emotions, building the discipline to be a professional trader. And that is what all this is about. That's why I said those three things when I started this video, right? Trading smart, managing risk while learning how to trade effectively. We are professional traders here, baby. That's the goal. So without further ado, let's get into the video. But before we do, I want to shout out my Discord community that I created. How long ago? It was back in September, and we have grown to over 150 members. If you're interested in joining, this is the best place to connect with me. Let me share this real quick. This is absolutely the best place to connect with me. If you want to reach out to me on anywhere, this is the place to do it. Okay, so if you're interested in joining the community, the link is going to be in my bio. We literally have a team of like-minded traders, and we hop on hangout sessions every single day. We just talk and we chop it out. What's up, Candon? How you doing? Yeah, but it's funny. I love this community. I love this community that I built, and it's just awesome how we all interact with each other. So if you're interested in being a part of that, the link is in my bio. And I guess I could say see you inside if you're interested in joining. But one disclaimer: if you do not engage in the community, I will kick you out, because I want to foster a tight-knit circle of like-minded traders who are going to engage with each other on a day-to-day basis, learn, grow from each other, and just get better, right? All ships rising. We all get better. So that's what that is. If you're interested, feel free to join. I would love to have you. And now we can get it in today's session, okay? So right away in the overnight session, I can see that one of my pre-market session models is present in price action. How do I know that? Well, because I have intel from the London session telling me that there is something in motion. Now, if we look at the low a day forms at the time, ignore all of this price action, right? At the time, this was the low day. And this was in the London session. We see this 430 candle. That's in the London kill zone. And look where the bodies close on these 15-minute candles. Look what they're respecting. What is that? That's the consequent encroachment of this daily SIBI right here. This level right here, right? So here we have this SIBI on the daily time frame. This has been our draw on liquidity for a really long time, and this is what I've been using to frame the analysis behind all my trades recently. The market's just been trading around this level a lot. So if we go into today's session, in the overnight session, we can see how price is reacting to that level right here, right? So that forms a low day. And coming into the pre-market session at 7 o'clock in the morning, 7 o'clock New York Eastern Standard Time, I can see that we have this large displacement right here. We have a change in the state delivery closing over the open price of this order block right here. So it's clear to me that we have a smart money reversal. Notice how the market is putting in higher highs and higher lows, right? Kind of building this trend line, right? Which gets destroyed later, right? Which I'll explain the logic behind that in a bit. But I'm seeing this clearly indicates that the market is in a buy program. So I'm looking for the market to retrace into a short-term discount or reprice to a higher time frame discount rate so I can become a part of that move. And this is my approach to the pre-market session when I have intel from the London session that suggests that something is clearly in motion, right? And we can see here we have our original consolidation. We can establish this as a market maker buy model, right? Here's our original consolidation. We drop down, protraction lower. We take the sell side liquidity first. So what is going to be next? Buy side liquidity, which would be above where? Well, we have this high here, and this high here, and this high here. All these highs are very smooth. They're undisrupted. So we know that there's going to be buy side liquidity resting above those highs. So this is my terminus for the pre-market session run. You can see we delivered to that, and then boom, the market trades, rolls over, and runs against what was profitable in the pre-market session. So one market profile that I've established from simply just coming to the market every single day, forward testing, doing a lot of journaling, is this right here, where we can see in the London session, we have some intel that suggests that we're on the buy side of the curve of one market maker model, right? But that market maker model is counter to the real move of the day. So you can see in this example, we have a market maker buy model. Once this market maker buy model is completed, it delivers to its terminus. Then we see the transition from the buy side of the curve to the sell side of the curve in a market maker sell model, which if we go to the 1 hour time frame, did I go to the 1 hour? No, I didn't. if we go to the 1 hour time frame, we can see that we do have a market maker sell model. Look at this original consolidation down here, right? Today we reached all the way down there into those lows. So we could view this as the start of the original consolidation of a market maker sell model, trade up, now on the 50-minute time frame. We can see that once price delivers to the terminus of this market maker buy model, which is counter to the higher time frame market maker sell model, then we see a run against what was profitable in the pre-market session. So that's just a repeating characteristic that I've realized in price actions since I've been studying market maker models and macros recently. I've identified morning session profiles. I outlined them. There's 4 different profiles, which I can explain in a video if you would like me to, although I'm not even profitable yet, so why would you want me to teach you? I don't know, just had to throw that in there. But anyways, usually what we see is what I outlined. We have a market maker model counter to the higher time frame market maker model, right? So on the 1 hour time frame, we can see that market maker sell model. Once it delivers to its terminus, then we see a run against what was profitable in the pre-market session. Usually that is what the New York morning session does. When we have a profile like this where we see reversal after 9:30, we usually run against what was profitable in the pre-market session. So yeah. And notice how we delivered to the terminus slightly before the 9:30 open. So here's that 9:30 candle. We dig into it before then, right, in the 9 o'clock candle. So if we drop down to the lower time frame, we can see how we delivered to that terminus right here. Let me just mark this out. At when? During the 8:50 to 9:10 macro. So what I've noticed is that when we see this profile, the market tends to deliver slightly before 9:30 or after 9:30. In this case, it delivers to it slightly before. We kind of hang around in this area, and then we have a stop run. I'll get into that later, but let's break down the first trade that I took today. So using the logic from the market profile that I just outlined and what I've typically see repeating characteristics in price action, I want to get on side with this move, right? So when I see the market reacting off this new day opening gap right here, I'm not viewing that as the start of an entirely new move. I'm simply viewing this as the market repricing into a higher time frame discount array to offer a short-term discount and allow me to get on side with the move. So what I want to do is first identify my implied dealing range, which is the inception of the move or the start of the move to where I think price will deliver to. In this case, this was the inception of the move, right, where we have that low day in the London session. And then I want to frame out my dealing range. So simply just mark it out the midpoint of that, and that's going to be your equilibrium of the range. Below that's going to be a discount. Above that's going to be a premium. I want to see the market trade down into a discount as well as a higher time frame PD array, and then look for my lower time frame entry model, right? So I'm not viewing this as the start of an entirely new move. I'm not viewing this as the market running this high, trading into the new day opening gap, and then rolling over to go take the low right here, right? Because we have this market maker buy model in the higher time frame, and it has yet to deliver to its terminus. So because it has yet to deliver to its terminus, any retracement that we see is simply going to be a lower time frame market maker buy model aligned with the higher time frame market maker buy model. And that is what I'm looking for. But I want to look for my entry model in a discount relative to that implied dealing range, and I want to see the market drop into a higher time frame discount array, which we see as this buy side imbalance, sell side inefficiency here. You could also consider this order block right here. And in hindsight, I didn't see this in real time, but look where we react. Look where we formed the low in the pre-market session, which ICT initially said it was 7 o'clock New York Eastern Standard Time, but today, in today's lecture, he revealed that it was 6 o'clock New York Eastern Standard Time. So if we're using 7 o'clock as the start of the New York morning session, this forms the low of the New York morning session, rejecting off the consequent encroachment of this premium wick. So there you go. In this case, it's inverted, so it's a discount rate because price is above it. Just think of it as inversion, right? So now drop down to the 5-minute, and I have to look for an area price action below the discount, right? Below the discount of the implied dealing range. I'm going to put the 0 and 1 on this. Style 0, 1. There we go, right? So there's the high and the low right here. Below equilibrium, that's a discount. Now, where can the market potentially reverse here? Well, I saw this 5-minute order block, and I also saw this fair value gap on that large displacement, which created that 15-minute buy side imbalance, sell side inefficiency. If I drop a midpoint on that, clean this up a bit, I can see that consequent encroachment of this literally lines up with the 5-minute order block. So I was anticipating the market to turn there. Now, initially, I wanted to set a limit order there because I was so confident in the market turning here, because this is just simply what I see happen over and over and over again in price action. This is a morning session profile that I've outlined, put it down in my journal. And what do you know? Come to the market today and it's present in price action. So I'm just going to repeat what I've already seen before, right? Now I was very confident in the market turning here. So initially I wanted to literally just throw a limit order on here and just target these highs above here. But since I'm aiming for low threshold objectives, I would actually take off at probably the low. No, I would take off at this high right here, right there. That would be my low threshold objective. That was what I was initially targeting. Never delivered there. You can see, traded up there, rejected off the new day opening gap low, and then rolled over, stopped me out. So if we go down to the lower time frame, because I initially wanted to set my limit order at that 5-minute order block as well as consequent growth run of that 5-minute inefficiency, once the market started moving away from that, I felt FOMO because I was like, oh man, that's where I wanted to get my fill. Now the market's moving away from there. It's going to leave without me, right? So I started to feel a bit of FOMO. So I trailed my buy limit order up and I got a fill on this volume imbalance right here. Not even the fair value gap, although this would be a part of the inefficiency. Here's the fair value gap right here, right? So I literally trailed my buy limit order up to the volume imbalance and it just hung around, spent a lot of time here, didn't go anywhere, rejected that new day opening gap low literally to the tick, rolled over. Then once we saw a stop run inside of this higher time frame inefficiency, that is when the real move of the session occurred. And I was watching this. I tape read this, although I did not participate in it because I simply just want to take one pull of the trigger in each session. I'm just working on building self-control and discipline, right? Maybe once I build an emotional tolerance to where I know with confidence that I can handle myself after I take a loss and not allow that loss to influence my decision-making processes in the following trade, then I can take maybe 2 trades a session. Or maybe, say I don't see anything in the pre-market session, I'll be able to take 2 trades post 9:30, right? Less is more. I'm focusing on just taking less trades, but more high-quality setups. Less is more. The best traders have well-written rules for inactivity, right? So I know I'm trying to figure out exactly when I don't want to trade and exactly when I do want to trade, building those rules of engagement. And I just want to take one pull of the trigger to work on establishing that self-control and discipline because I want to be a professional money manager. That's what this is about, right? So in this case, I felt a bit of FOMO, trailed my buy limit order up, stop loss below the swing, stopped me out, real move occurred. My analysis was correct. Price delivered exactly where I was anticipated to do. My pre-market model played out exactly as I have outlined in my journal. This is the New York morning session profile that I've outlined in my journal. I know exactly how I want to approach this. I tried it. I felt a bit of FOMO. It didn't work out, but it still delivered to my objective. And this is just a repeating phenomenon that occurs over and over and over again. So I know that this is going to happen again. I'm not tripping about it. I'm not chasing the move. I took the loss and then I hopped on the Discord hangout with the boys and we just chopped it up for a bit. So that was cool. It's fine. I'm waiting for my next setup post 9:30, right? Because I only want to take one pull of the trigger. So that's what happened there. And in hindsight, even if I go to the 15-second chart, my entry model is I will either take a very simple, now y'all let me know if I'm doing way too much, if I have 3 different ways that I could use to get to a trade. Number 1, it would be an inversion fair value gap in the price leg that has a stop run, like for example here, right? So this is an example of my entry model. Inversion fair value gap in the price leg that has a stop run, as well as an overlapping fair value gap, right? IFVG plus FEG, stop run, that's an entry model. And another entry model of mine would be simply a model 2022 entry, which would also be in this case right here, right? Where we have a market structure shift. The market takes out a short-term high. Leaves a fair value gap. I'm taking the market long down into this fair value gap right here, okay? And then my third entry model would be a breaker formation, where I'm looking for the first inversion fair value gap in the price leg that has a stop run. That is where I'm putting a trade on right there. So those are the 3 ways that I look to put on a trade. That's how I get into a trade. If that's too much, and if I should just focus on one, y'all let me know. But still doing a lot of trial and error. In this case, it was just a bit of FOMO, right? But the real move still delivered exactly as I anticipated. Now 9:30, we can get into that trade as well. My number one issue. Well, we had a small opening range gap. Whenever we have a small opening range gap, especially of 20 handles or less, that indicates that it is conducive that the market is going to have high resistance liquidity conditions. And in this case, you can see that we have high resistance liquidity conditions. What do you mean? Or what does that mean? That means that it's going to be very challenging conditions to operate in. And I know that. And I know that I do not operate well in these conditions. And my immediate protocol when we have a small opening range gap is to wait for that first element of time after 9:30, which would be the 9:50 to 10:10 macro. In this case, I did not adhere to that rule, right? And what happened as a result? I got punished. I hurt myself not adhering to that rule. So that is a critical lesson that I have to take into the following sessions. In future occasions where we have a small opening range gap, I know, look, dude, you know what's happened in the past. You hurt yourself whenever you do this, so why would you do it again, right? So I have to associate operating in these conditions with the probability of how easy it is for me to hurt myself. And therefore, I cannot operate in these conditions until I wait to that first element of time, which would be 9:50, 10 o'clock. Wait for a silver bullet, wait for something that makes sense after 10 o'clock, waiting for that 9:50 macro, right? In this case, did not adhere to that rule. And again, the market played out exactly as I anticipated to do so, right? But it just had a deeper retracement that knocked me out of the market. So I took the market short in this fair value gap here when I saw we had a run on minor buy side liquidity above here, right? We had a run on minor buy side liquidity. Stop run, we do the large upper wick will be closed below. Then I see displacement under this short-term low, leaving a fair value gap. So we have a market structure shift. We also have a change in the state of delivery. So what is this? This is simply a model 2022 entry, right? So I sell short when the market trades up into this fair value gap right here. I put a stop loss above this high, and it comes back, has a deeper retracement, and stops me out. But look when the real move of the day occurs. It occurs during what? The 9:50 to 10:10 macro, which is when I should be waiting to trade because we have a small opening range gap. So I did not adhere to that rule. I hurt myself. And then the real move of the day occurs when or during the time period that I should have waited for, right? So there you go. Crucial mistake. That's kind of basically it. Just really not waiting for the element of time and trading in a period of time where it's very likely for me to easily hurt myself. And if we go to the 15-second time frame, we can see that here's my entry model, right? Inversion, fair value gap, boom. Liquidity run. We run these stops right here. So in this case, I was the liquidity, right? Because I was short with the stop loss above this high. So in this case, the market had a deeper retracement, took out the liquidity. I was a part of the liquidity that it took out of the marketplace before we had that real move of the day. And look at the displacement, how we run those highs, right? And if we drop to the 1 minute, or if we go up to the 1 minute, if I drop quadrants on that wick, like this, boom. Look how we're respecting that upper quadrant right there. Look at the body stop. So it's basically perfect, right? And there you go. That's how the real move of the day occurred. And we can see also low resistance liquidity below. Look at these relative equal lows, these relative equal lows. So in this case, market profile that I've identified, not the S&P, we have a market maker model, right? That market maker model delivers to its terminus shortly before 9:30. We see a smart money reversal after 9:30. And then we go attack the low a day, which was formed in the London session. And then we distribute lower for the remainder of the session. So this is a New York reversal profile in my eyes. I don't know if that's actually technically the term. This is what I called it based on other profiles that I kind of studied for a little bit. But this is how I see it. This is how I see it. We have a market maker buy model that's counter to the real move of the day, delivers to its terminus slightly before or after 9:30, engages key liquidity, which would simply be above these highs, right? And then we see a smart money reversal, trade lower. So my analysis was correct twice. I just mistimed the market twice. Not the worst session, not the best session. Obviously, there were some little things that I can just tweak and work on that would allow me to make this a much better session. Like, for example, knowing that we have a small opening range gap and just sitting still and just doing nothing, right? Being a professional trader, knowing we need to sit still. It all ties back to that, right? Being a professional trader. That is what I want to do. I want to be a professional trader, know when it's likely for me to hurt myself, and just don't be involved. So, not that. If you go to the account, now we are only $190 in profit after those 2 losses, which is fine because see us up tomorrow. Probably take that, and using the lessons I learned today can make me better. So we got 3 losing trades in a row. I'm not tripping about it at all, right? I'm just learning, getting better day by day. That's why I'm doing this on a paper account, right? And I think that's about it for this one. So until tomorrow, good luck and good trading. Goodbye.